Happy Friday, Brian Manning here with your weekly update. Let's get right to it. So we're just going to cut straight to the chase of everything this week. It's all about employment and what's going on right now in the marketplace. So first week of every month, we get employment information. I've been talking about this for years. First Wednesday, we get ADP. First Friday, we get the BLS. So ADP is the largest provider of private payrolls in the U.S. And then for the month of May, there's about 175,000 new jobs that were expected to be created. ADP says, oops, only 27,000 new jobs were created. All right, well, that's a big miss. But they don't always correlate with the BLS. BLS is the Bureau of Labor Statistics. Over time, they kind of line up, but on a month-to-month basis, they do not always correlate with each other, so you never really know. But then we get the BLS report today. So BLS report was, again, expectations of 175,000 new jobs created for the month of May. Only got 75,000 new jobs created for the month of May. Also, BLS came back and they revised the prior 2 months and they reduced those by 75,000 jobs. So just a stinker, lousy report across the board. Unemployment stayed flat, which is interesting to see. And then also what we look at is weekly earnings. So just weekly earnings for how much employees are earning. And weekly earnings went down from 2.9% to 2.8%. So looking at the U.S. economy going into a recession, which we've been talking about for a year or two now, the hiring, the job creations for the BLS is really the leading indicator, right? So when you're seeing less jobs being created, that's the leading indicator. Unemployment is flat right now. Unemployment rate is going to be an indicator on this as well. And then wage pressure inflation. So you see employment going down. So new job hires just are not taking place the way they were before. And then unemployment is going to be the trailing indicator in this. And as soon as you see unemployment kind of bottom out and then start to increase, pretty solid sign we're floating right into a recession there. So leading indicators, trailing indicators, everything we've been talking about for a while, U.S. economy, we'll see how it goes. Stocks, though, interesting to say, are rallying today. It's almost like, hey, break out the punch bowl. Federal Reserve is going to lower rates, we start to rally. Well, if the Federal Reserve comes out and the Federal Reserve says, nah, we're going to be patient, let's wait and see what happens. We're not going to start lowering rates just yet. They're going to yank the party from the punch bowl when it comes to stocks, and they're going to have a pretty bad financial market there. So overall, today's an amazing day to lock your interest rates. Overall, I'd say we'll see general trajectory of rates going down. Certainly a great time to refinance, certainly a great time to buy a house. Any questions, give me a call. I'd love to help you any way we can. Happy Friday.